In today's video, we're going to talk about something really important. Hits home with me, and I want to just break it down and unpack it for you. But first, let me ask you this question. How many times right now, or even in the last 6 months, have you contracted somebody and then 30 days later you get that notification from the office, there's a chargeback on the reserve because they've refinanced it? This has happened a lot right now because the rates are constantly moving up. So in today's video, I want to unpack why product is more important than reserve. Where do you stack up? How do you measure how strong you are? Are you a great F&I manager? Are you a good F&I manager? How would you rank against other F&I managers across the country? Today's video sponsor is Linus. Linus is an F&I leaderboard software, and it is the coolest thing you've ever seen. You log in and you immediately see yourself ranked on every F&I metric with other F&I managers across the country. Check out my special offer in the description and save 10% on your monthly subscription. You can't change what you don't know. Trust me, do yourself a favor. This software is going to change your career. So right now, I'm sure a lot of you guys know, the rates are changing constantly. I mean, almost daily. If you turn on the news, it's all you can hear about is how the rates are changing. And I know, just like you, everybody is being affected by the rate change, especially in our industry. So the reason that I feel like that reserve is become kind of a thing of the past, or it is becoming kind of a thing of the past, is number one, a lot of banks have started to switch to flat fees instead of rate markup, which I think is way more beneficial, not just for you, but also for your customer. But let's talk about flat fees for a minute, since I brought it up. Let's talk about flat fees. So if you're unfamiliar with a flat fee, let me tell you how that works. So the way a flat fee works is your bank comes back with an approval at, let's just say, 4%, just to use even math. So your bank comes back with an approval at 4%. Now, if you have a lender that's willing to pay you 1%, 2%, or some of them out there even paying 3%, all the way up to 5% of the amount financed, those are awesome programs. And the reason I say that is because you're still giving your customer the best rate and you're not marking it up. Because the danger with rate markup is when your customer calls the bank and they want to set up their automatic payment or they call their insurance company, because insurance companies are even involved in this now. They call the bank, they call the insurance company, and the first question they get is, oh my gosh, did you get a new car? Well, the follow-up to that is, are you familiar with our better interest rate program or our bank program or our promotional rate that we have right now if you refinance? I've seen some banks out there right now that will pay a customer of their percentage of the amount they financed to refinance their car. It's no joke. They're attracting and out there after the same business that we're out there and attracting and after. So they have to come up with ways to get creative, and that's kind of the purpose behind this video today, is to talk to you about why I feel like product is way more important than reserve. If you do a really good job, and I mean a really good job of explaining the product and what it is and the benefit to the customer and the benefit to the dealership and why it makes everybody's purchase and everybody's transaction and everybody's car buying experience that much better, then even if the customer does go down to the bank or does go down to the insurance company and they do refinance that car loan, they're not going to cancel that product because there's value in the product. By the way, guys, Indianapolis, Indiana, every quarter, me and my team teach an F&I boot camp. We have our beginners class where we show you how to present a service contract, how to present gap, how to use a menu, and even deal structure. Then we also move into our intermediate class to those same foundational skills, but we also introduce compliance and some more products. And that leads up into our F&I Masters class. Listen, whether you've been to an F&I school in the past or not, if you want to train with me and my team, then you need to click the link in the description below to secure your seat. You can't control the interest rate that someone gets at the dealership. I mean, you can to a small, maybe a small half point, quarter point. You can make a phone call, but you really can't dictate the interest rate that much. And you really can't dictate what kind of interest rate and what kind of program, where they bank or where they have insurance has to offer them. It's just not, it's something that's completely out of your hands. What you can control, however, is the way that you treat the customer. You can control the way that you present the product, the presentation that you give, and ultimately you can control the value that the customer perceives. And if you establish enough value, then all of a sudden, maybe they refinance it, maybe they don't. It doesn't matter because you're not making a living or you're not depending on or you're not creating your portfolio based on reserve. And this happens a lot. A lot of guys will get this 4% and then they take it and they add 2 points to it. And now all of a sudden we got a 6% interest rate and we got a $1,500 reserve. Well, as soon as that customer winds up in a situation where they go somewhere and find out they can get a 4% or a 4.5%, and you charged them 6%, now this $1,500 never really existed because it's just gonna be an instant chargeback. You can protect yourself from this. You can save yourself a lot of heartache and a lot of headache to operate on that flat fee program and take the percentage of amount finance, just say it's 2%, instead of living on large reserves, because large reserves don't really gain you anything if the customer refinances. They just really set you up for failure. And I don't know about you, but F&I pay plans across the country, now maybe your store is different, but across the country, they penalize finance managers for these chargebacks. And a $1,500 reserve sounds great, but a $1,500 chargeback sounds horrible. So that's the reason that I'm so hung up on this, and that's the reason I talk about it. I'm passionate about it. I feel like it's very important that in this video we really break this down, why product supersedes reserve and why it's so important that you don't focus and you don't direct your attention toward the reserve, but instead direct that same attention toward building value and making sure that when your customer leaves, they understand what it is they bought, why it's important that they bought it. So even if they do wind up in this refinance, you avoid this chargeback. And I would much rather have a chargeback that's 1 or 2% of the amount financed because my customer refinanced the vehicle than a $1,500 chargeback because I marked the interest rate up 2%. And there's the other thing, common sense comes into play. So if I write a customer at a 4% interest rate and their bank offers them 3.9 or 3.5, the hassle of redoing all the paperwork, redoing all the title work for the customer, they'll probably just stay with the 4%. So you're doing yourself a far better favor. One, not only to operate this way, but two, I think you explain that to your customer. When the customer calls into the dealership, hey, Cory, listen, we love our new vehicle, but when we called the bank to set up our auto payments, the bank told us that they can offer us a 3.5% interest rate. Hey, Mr. and Mrs. Customer, that's fantastic. I'm happy for you, but let me explain to you how the refinance works, just so you know how that works. And when you do that, and when you take the time instead of becoming aggravated or frustrated that the customer is going to refinance the vehicle, and you explain how it works and what steps are involved, at a 0.5%, at a 1/4%, I'm not going to mess with it, and they're not going to mess with it either. But it's all in how you handle that conversation. So remember, take a deep breath, unpack it, explain it to your customer. When you do this, when you take time to operate on a professional level like this, these chargebacks, they're a thing of the past. So my advice, again, don't get hung up on reserve. Our job is to sell product. And I say sell product, but in reality, it's enroll product, because the ultimate goal of product is to protect your customer. It's not to sell them anything, it's to protect them. And it doesn't just protect the customer, it also protects the dealership. Service contract 101. If my customer buys a car and 3 weeks later something breaks or goes bad and they have a service contract and they bring it back and it gets fixed for free, they don't forget that. And if you make one customer mad, they'll tell 20. If you make one customer happy, they'll tell 2. That's just how it works in the car business. So remember that. Hey guys, thanks for watching. I hope you enjoyed the content as much as I enjoyed putting it together for you. Do me a favor, if you have a question, if you have a process in your dealership, if there's something you're doing that's unique and you don't mind sharing it, leave a comment below. Let's talk about it. If you need some advice, if there's a way that I can help you, that's what that comment section is for. Hit that like button, ring that bell, subscribe to this channel. Guys, remember, we drop these videos Monday through Friday, 1 o'clock Eastern. Be sure and check out Linus. Be sure and check out the F&I Bootcamp.